Oh, good morning, good morning, good morning. It's me, Kenny Polcara, your host of the party. And today is April 6th, 2022. And so much going on. Lael Brainerd goes from dove to hawk, and I'm curious how she did that, as is the markets. So this is what you need to know. And that happened yesterday, right? She made history becoming a hawk after living her life as a dove. Algos did not like what they heard her say, and boom, they always shoot first and ask questions later. The Dow was the winner yesterday. It only fell by less than 1%, while the other indexes got slammed. So think about large cap value. Hello? Oil retreats on the economic slowdown worries, right? That Lael Brainerd created. Bonds continue to fall, sending yields surging. Twitter finds a spot for Lonnie on their board. And what do we have for dinner tonight? We're having this pork loin with a scrumptious peach sauce. Now look, I made this last night for dinner. It is delicious and easy to make. Okay, so ready? Think about it like this. The lights flickered and then they went dark. The band begins to play and the curtain rises. Not a sound from anyone in the theater as a spotlight shines a single beam of light onto the center of the stage. And then, enter stage left. Fed Governor Lael Brainerd, formerly a dove, but yesterday she was a hawk. Addressing the crowd, she says that she expects the Fed to raise rates more aggressively and run off the $9 trillion balance sheet at a quicker pace than originally thought in order to bring U.S. monetary policy to a more neutral position, a position that has yet to be defined by anyone at the Fed, promising to tighten further as needed. In fact, here was her opening statement, right? Her opening line at this Minneapolis conference that she was at yesterday. And I quote, "I think we can all absolutely agree inflation is too high and bringing inflation down is of paramount importance. To do so, the Fed will raise rates methodically as soon as next month, and they'll begin to reduce its $9 trillion balance sheet, quickly arriving at a considerably more rapid pace of runoff than the last time the Fed shrank its holdings. The rapid portfolio reductions will contribute to monetary policy tightening over and above the expected increases in the policy rate reflected in market pricing and the committee's summary economic projections." Scratch my head. So what's it mean? Okay, let's be clear. First of all, strap in. Next, rates are going to rise at a faster pace than what the market's expecting, and the balance sheet reduction will happen even faster. The tone of her comments were anything but dovish, and that caught markets off guard because Lael has always been the soft-spoken one of the more dovish, guarded policymakers, so her words are important. Investors, traders, and algos listening intently, especially because today we're going to get the FOMC minutes from the last meeting, and they are to detail what the Fed think is. But I guess by now we know what the Fed think is, and so stocks took it on the chin. By the closing bell yesterday, the Dow, the clear winner in percentage terms, fell only 280 points, or 0.8%. The S&P fell 57 points, or 1.25%. The Nasdaq off 330 points, or 2.25%. The Russell gave back 50 points, or 2.5%, and the transports continued their nosedive, losing 435 points, or 2.8%, giving back 10% in the last 3 days, breaching every trend line and ending the day 300 points below its long-term 200-day moving average, leaving it only 700 points, or 4.5% away from the February lows. Only 3 groups ended up on the day, and they're all considered defensive value plays. Utilities up 0.6%. Consumer staples up 0.1%, and healthcare up 0.25%. All things that you need no matter what the economy is doing, right? So they are defensive safety plays. All the names and groups that rallied on the back of the Lonnie Must Tweet news on Monday were the first ones to go down the tube yesterday. In fact, in yesterday morning's note, I said, and I quote, "As you can imagine, it was the most beaten up sectors that were the winners on Monday. Tech, consumer discretionary, communications, retail, housing, and innovation technology all saw gains," right? But then I said, don't you see the pattern here? all of the money that went into the most beaten up names in the sectors as Lonnie Musk lit the fuse and created all kinds of excitement for traders in the markets. No matter that the yield curve remains inverted and the Fed is about to get very aggressive. But do not think that this is long-term money just yet. It is trading money. When the mood sours, these will also be the sectors that take it on the chin again. And what happened? Well, the mood soured yesterday, and boy, oh boy, did these industries and sectors take it on the chin. Those same groups getting slammed, giving back all of their Monday gains and then some. Tech down 2%, consumer discretionary down 2.5%, communications down 1.5%, retail and housing both down 2%, and innovation technology down 6%. That's Kathy Woods' ARK fund. The bond market fell, sending yields surging. The 2's up 9 basis points, the 5's are up 14 basis points, the 10's up 15 basis points, and the 30's were up 11 basis points. As of last night, the 5's and 10's remain inverted, and the 5's and 30's remain inverted, which continues to add to the confusion. There are those that are saying the inversion means nothing and that the metric is no longer reliable because of all the stimulus in the system. So pay no attention. Okay, great. I'm no longer paying attention to the yield curve inversion, but that does not mean that we aren't going into a recession. We discussed this. If rates go to where they should go, then we're going into a recession. If they try to hold them at artificially low levels, then maybe all we'll get is stagflation and not a recession. Look, I hear you. It's a little bit of an anxious time. But the last time inflation was running at 10% was in 1980. Actually, it was running at 13.5%. Interest rates were 20% on their way to 21%. The cause? Well, it was the inflationary spiral that was brought on by rising oil prices. Check. Government overspending. Check. And rising wages. Check again. Today's inflation is running at 10%. Some say it's even higher. Oil has spiked. The government has overspent. And the Fed has unleashed the printing presses, all while wages are rising. So check, 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 and check again. And interest rates are where? Fed funds are at 1/4 to 1/2 of 1%, and the 10-year's at 2.5%. Does anyone else see an issue here? Am I the only one? I mean, come on, man. We are way behind the 8 ball. Who is kidding who? I know, I forgot. This time it's different. Yeah, every time is different. I get it. Oil, which has also been psychotic, rallied higher in the early morning and then collapsed, falling 1.8% to end the day at 101.40. But it fell 3.5% from the intraday high after trader types took the latest commentary from the Fed because a downturn in the economy brought on by rising rates will cause demand destruction. Unemployment will rise, the cost of living will surge, and that will cause demand destruction. But remember, many oil analysts on the street have had higher year-end prices for oil, right? Goldman's got 130. RBC says don't be surprised at 200. I know that can change, but right now it is what it is. Stocks around the world this morning were lower. Dow futures down 140, S&P's down 21, the NASDAQ was off 105, the Russell off 10. Bonds and sovereign debt around the world are in sell-off mode, taking stocks with them. In Asia, Hong Kong and Japan took it the hardest, falling 2% and 1.6% respectively. In Europe, markets across the region are all down better than 1% at 5 o'clock this morning. Investors sending stocks lower after Brainerd's comments while we all wait for the FOMC minutes at 2 o'clock. And any news, we're also waiting for any new news concerning new Russian sanctions. As you can expect, the rate-sensitive sectors are the ones that are getting hit the hardest overseas as well as probably here today. Economic data today is all about the FOMC minutes, and like I said, that happens at 2 p.m. There is no other, there's mortgage apps. Not relevant at this moment, even though mortgages are skyrocketing, so maybe it is a little bit more relevant, but let's talk about afterwards. Bitcoin trading at 46,000, Ethereum's trading at 3,500. The S&P closed at 45.25, down 58 points after trading in a range of 45.14 to 45.93. We busted right through what was perceived as support at 45.40, which is the intermediate trend line, and appear ready to test 44.90 or the long-term 200-day moving average trend line. Now, to be clear, the S&P is nowhere near testing the lows of January 42.20 or February 41.30. but you must be prepared for a sudden shift in thinking. Earnings start in 1 week with JP Morgan, BlackRock, Best Buy and Beyond, Bed Bath & Beyond, and Delta Airlines hitting the runway. Remember, JP Morgan is the first down name to report, so that's marked as the official start to the season. Jamie Dimon, JP Morgan CEO, already warning us on Monday of billion-dollar losses due to chaos in Russia. Who else is going to surprise investors, and what will forward guidance look like is the question. Look, earnings are expected to be up 3.5% year over year, while revenues are supposed to grow by 9.5% year over year. That's great, but that's history. The question is, what will they be in the second, third, and fourth quarters of 2022? Okay, so what are we having for dinner? Oh my God, this was so delicious. Pork loin with a peach sauce. So easy to make. I had this last night. It's so good. You just season the loin, you massage it with a bit of olive oil, you sear it on the stove, and then place it in a roasting pan, uncovered, in a 350-degree oven for 40 minutes or so. So let me just give you the details. For this, you're going to need the pork loin, right? You need salt and pepper, you need olive oil, you need adobo if you have it. It's a Spanish seasoning. You can find it in the aisle with all the other seasonings in your favorite grocer. It comes, it's kind of a mixture of seasonings. It's good. You can use it on a bunch of things. So I put a little bit of that also on the pork loin last night. For the sauce, you need 1 can of those sliced peaches with their juice. You need honey, and you need peach jam or peach preserves. Now, preheat your oven to 350 degrees. Season the pork with salt and pepper and the adobo if you have it. Put a little bit of olive oil on it and massage it really well, making sure to work it into the whole loin, right up and down, up on the back side, on the front side, whatever. Now, in a large pot that's going to accommodate this loin, heat up just a bit more olive oil in the pot, get it nice and hot. Add the loin. You can hear it sizzle as it sears on one side, and then turn it over on the other side, and then turn it over again on the other side. Now, once it's all seared and brown, transfer it to the Pyrex roasting dish. Place it in the center rack in your oven, uncovered. Now, while that's happening, in the saute pan, you're going to add the can of peaches with the juice, 2 tablespoons of honey, and 2 tablespoons of peach jam. You want to turn the heat up on the stove to high just to get it going, get it boiling, and then turn it down to medium so that you want the peaches to warm through. Right, you want the whole thing to be kind of hot and the peaches to get warm through. Right, maybe the whole thing takes 10 minutes. You don't want to burn it, so just be careful. Now, take that whole thing and in a blender or a food processor, blend the peaches and the juice. Do not liquefy it. Just blend it so that there's some chunk left in the peaches. When there's about 10 minutes left for the pork, so after the pork's been cooking for 30 minutes, take it out, pour the peach sauce all over the loin, and put it back in the oven. Let it sit there another 10 minutes for a total of 40 minutes for the pork, and then take it out. Put it on the counter, let it rest for 5 minutes, and then slice it at an angle and present it on a platter with the peach sauce poured over it. Oh my God, yum. This is served, you can serve this with your favorite salad and a glass of wine. The meal should not cost you any more than $30 without the wine, and that's going to feed a family of 4. Trust me, I made it last night. It's simple to make. Everyone loved it. I had a little bit left over, so lunch today. In any event, the day is beautiful. It's going to be gorgeous down here in South Florida. Tomorrow I'm at a conference, and Friday I'll be at that same conference. So tomorrow morning there'll be a note. Friday morning probably not. Until then, take good care.